My friends, what is going on? Welcome back to the channel. Welcome back to class. So this video is going to be it's going to be great for new people especially. But what this video is going to be about is how to set up your TradingView charts. So some of you guys who come into the Discord, especially if you're new people, number one, welcome to the team. Number two, a lot of people ask me like, well, how do you set up your chart? I don't really even know what I'm doing. So like I said, I just kind of wanted to walk through. If you pull up or open TradingView, now obviously it's going to be a little bit different when you're on either your phone or whether you're on like an iPad. However, overall, it's still going to work very similarly. So if you pull up a TradingView chart, like I said, this is going to be what it would look like. Now, it's going to look like a darker background with red and green candles. I prefer the white background with the old school Japanese looking candles, which were just black and white candles. Some people like to change their chart colors purely from a aesthetic standpoint, which is me. I just want I'm a anywhere between white and black and all the grays in between. Like I'm wearing gray shirt, black shorts. So it's like I said, I'm just a black and gray person, black, white, and gray, all that color palette, if you will. So, but some people like to change it from a mental standpoint. You see those big green candles, you get real greedy. You see those big red candles, and you get real fearful. So some people like to change it because of that. I like to change mine from an aesthetic and just being able to see everything a little bit cleaner purpose. So when you pull up TradingView, like I said, this is going to be what it looks like. You're going to have a lot of noise over here on the right side as far as like different stocks and values and what's going to be going up and down, throughout the day. I personally like to get rid of that. If I don't want to look at a different stock, I'll go look at a different stock. So it's basically three little squares stacked up on each other down here in the bottom right, which I actually think you probably can't see right now because that's going to be where my face is. But there's three little squares. If you click on that, then it turns into your object tree. So as you draw more trend lines, like for instance, I'll clear all this out here in a second, but if I start going in here on my SPY chart, and it starts getting a little busy, whole lot starting to go on, and it's like, okay, I want to clean some of this stuff out, then you can hide it all. And this is a good exercise to do every now and then, is just start with a blank chart, a blank canvas, if you will, and go, okay, what am I really seeing in this picture now? So if you pull it up, I like to have my object tree on the right, and then of course you're going to have all your tools over here on the left, and we'll go through those in a little bit. Up here in the top left corner, that's where it says SPY. You click on that, and that's going to pull up your little menu if you ever want to change charts. So if we go over here and we look at AMC, and then AMC's chart will pull up. So let me just go back to SPY. Another thing that I highly recommend is that you always chart in log scale. So the difference between log and linear, I'll actually pull AMC's chart back up so you can see this. But when a chart is not in log scale, especially when you're looking at it on a more macro basis, then everything is kind of heavily distorted and squished together. So this is going to be what a linear scale looks like. When you click on a log scale, now it's going to move everything from a percentage standpoint, and now you can clearly see, which is also, by the way, this is how institutions trade and chart. And so when you pull it up on a log scale, now you can actually see what's going on, and it's not as compressed or messy. Obviously, the number values are still the same, but you're just going to get different levels. And to me, I want to trade with what the big boys trade on. The big boys trade on log scale. Now you can toggle back and forth. The closer that you get, like I said, especially with stocks that have like big moves in them, a log and linear doesn't look all that different here, right? Okay, so it doesn't look all that different. But the further out that you get, when you're looking more macro, so once again, here's log and then here's linear. So still get the same levels. It's just a much different way to interpret a chart. And honestly, I think it's a much better way to look at things. So I highly recommend you always chart on log. So let me go back to SPY. So once again, blank canvas. So section number one is going to be all your different trend lines. So your trend lines, you just essentially click on the top, and this is where you're playing a little bit of like connect the dots, okay? So you can move the lines however you want to. Anytime you're using trends, I always highly recommend you capture as much price action as you possibly can. And I recommend, so that means using the wicks most of the time. Now, when there's incredibly volatile moments, you're going to have moments where you might have a wick out or a wick down a little bit. But overall, you're looking for when there's normal price action going on, what is going to be encompassed in my chart. Okay, and then once again, you can always click on them, and a little settings will pop up on it. You can change the thickness of it if you want to. You can extend it out, and then there's a little trash can. Boom, you can click on it, delete it, bring it right back if you need to. Okay, so that's just going to be basic trends. I will use horizontal lines and horizontal rays when I'm really wanting a kind of specific range that I'm looking at. So a horizontal ray is going to give you just a perfectly straight line across at whatever level that you want. Also, you can click on these, and with your arrow tabs on your keyboard, you can move them around. I know that's probably hard to see, but like for instance, I'm just holding the up arrow right now. It's slowly moving up. So anytime you get on it, so like sometimes if you're out here and you're like, oh, okay, that looks pretty good, and then what you'll do is you'll go down here to like a lower time frame, zoom in, and go, oh dang, I'm not on it. I want to be right on the top of that wick. I want to know that key level 410.51. All right, that's good, and you can see how it's reacting over in here. So horizontal and extended, or horizontal line, sorry, that was horizontal ray. So horizontal line just means it's going to cut all the way across your chart. And I like doing this, especially if I'm looking at a range here on SPY. I'm like, okay, we found a lot of support right in here. And you come back and go, oh, that was a perfect rejection here. Oh, this was resistance here. Oh, this was support back here. So historically, it's a good way to look at it. When you're navigating your chart, when your mouse is in the middle of the chart and you're scrolling out, that's going to be what backs you up. And when you scroll in, that's going to be what gets you closer. And then you can just click on it and drag it around. So you click on it and drag it wherever you need to. If you need to make the chart bigger or smaller, then you're going to put your cursor over the levels over here. And then that's going to be what stretches or compresses. So you'll get used to it. You just got to get used to, going wherever you want to on the chart. By the way, if you're watching this in the future, this is February the 17th of 2023. Actually starting to break down a little bit, but I mean, and like I said, this is what you're looking for. You're looking for your different formations, whether they're pennants, whether they're flags, whether they're rising wedges, whether they're descending wedges. That's going to be overall what you're looking for when you're using your trend line. So see, like down here from the daily, that looked pretty clean, but it was off just a little bit. So that's what I usually do. I usually come down. Like if I'm looking more macro, and I'll kind of figure out like really where I want to start. You can see how well this trend line has been respected here. And also too, if you click on your trend line, sometimes when you're moving things around, there's a little lock button. You can lock it in place. And now if you're going around and messing or accidentally click on it, you won't be able to move it. Okay, so that's usually what I like to do, especially with my trend lines. So once I get it really clean and where I like it, then I will lock it in place. But that's pretty much, basically the little tutorial I just gave you over the lines you can use with anyone. So a vertical line, boom, you just get a straight up and down vertical line, so on and so forth. Your parallel channel, you just essentially draw it and drag it. Now you get yourself a parallel channel, things of that nature. Pretty self-explanatory here. The next one down is going to be all the different like fibs and fib circles and, trend, fib time expansions and gone squares and all that kind of stuff. And let me tell you, don't get lost in the weeds on this deal. All right. All you need is a fib retracement and fib extension, and that's it. Okay. When using your fib retracement, what you're looking for is you go from whatever range you're looking at. So let's say I was looking at this range right here. So if I zoom in, if you will, what you're trying to capture is what is my swing low to my swing high. So in this particular area, which I don't know why that is. So in this particular area right here, what I'm looking to capture is I want to capture my swing ho. Swing ho. Don't capture a swing ho. My swing low and my swing high. All right. Wish I knew how to edit my own videos. I'd edit that out for sure. But so anyway, right here, swing low to the swing high. And once again, you can get in there and get after the nitty gritty. Now, on your Fibonacci retracements, the ones that I recommend that you have is going to be the 236, the 382, the 0.5, the 618, the 0.65, the 707, and the 786. Those are going to be your most important ones. Now, I don't remember exactly which ones come standard on the fibs, but essentially, you click on it, the little wheel will pop up. You can go in here and you can add the ones that I just told you about. Also, too, the labels on standard come on the left side, and it can get a little confusing sometimes and a little muddled up. So also, too, on the labels, you can look at the, I like to always flip them to the right. That way it's just nice and clean. Also, too, there's a fib levels based on log scale. I've talked about this many times before. You can see in the background how it's just barely, slightly changing. Okay, both levels are valid. I look at both with the fibs based on log scale, both on and off, really to kind of see where you're getting your best reactions in a particular range. Okay, the more micro you get with the fibs, the more you want to pay closer attention to like the 0.5 and the 618. That's the golden zone, if you will, and then the golden pocket is the 618 to the 0.65. That's your most likely retracement, and you can see just right here. I mean, I just pulled up this random one, but you can see how important this level has been. So that's pretty much fibs. So you can draw it from your swing low to your swing high. That'll give you retracements to the downside. If you're looking for potential retracements to the upside, then you draw what's called an inverse fib. This is where you're going to go from your high. Now, you're not going to go to this low, okay? You're going to go from this high to your next low. So when you draw them upwards, you're going from your low to your next high. So from here, I would go from my high down to my next low, and you can see, look at all this 618. Look at all this golden pocket rejections right here. So once again, that's why it's so important. But this is going to show you your key levels when from your swing high to your swing low. Now pushing back up, where should I be looking for some mathematical support and resistance levels? I use fib, both regular and inverse, probably 90% of the time. You can also use a fib extension, which is if you're looking for some potential upside targets. How that works, once again, using this same range, is you go from your low to your high to your next swing low. Okay, so not here. This isn't your lowest low. None of these are your lowest lows. Here's are your lowest lows. And you can see right here, look at all these rejections right along that 0.5 right there. But if I was looking for, what would be, if I busted over the top of this, my one extension, which the one extension is your low to your high. So watch this. If I draw that there, bink. So from the low to the high, that's going to be your one extension. You also have, you know, your 1.618, your 2.618, and your 3.618s. So like I said, think of fibs, fib extensions, inverse fibs. All that is essentially looking for those mathematical support and resistance. Those are the only two different indicators that I use in here. Okay, or excuse me, not indicators, tools. We'll get into indicators in just a second. The next one down is basically just going to be if you've ever seen me like put people's tweets in here. That's where you just copy a link from Twitter, and then you pull this up, you post it there, and then you click OK, and then it'll pop up right there. But I don't use this section too much. You can click on the arrows if you ever want to. You probably see me post some charts where it shows the arrows. But I don't use a ton in this area, to be honest with you. The next one is going to be all your different Elliott wave tools. So like if you click on Elliott wave impulse and you go 1, 2, 3, 4, 5. That's if you ever want to draw out your Elliott waves. That's how you can do that. But other than that, I really don't use anything in there either. Never use anything in here. Please don't be the person who's always using bars patterns. I honestly quit using them altogether because they were being so abused and misused on Twitter for so long when it came to like AMC cycle stuff. Because bars pattern is essentially you get a certain area that you want and it copies it, and then people will go, look, this is about to be what happened. And like you can just make it do whatever you want. Like look, the pattern's repeating. Or you can go, look, and if I zoom it out, so it's just a tool that people manipulate too much. So I don't know why I just showed you guys that. Don't use that. Don't use any of the emojis. The ruler right here, if you ever want to click on that just to see how big of a move it was, the time that the move took, you can do that if you want to. But that's pretty much over here. I really use the trend lines. I use the fib retracement and the fib extension. Don't clutter your chart up too much. Like I said, that's pretty much all I use as far as that is concerned. Now, if you ever want to change, once again, your time, so you've got your symbol up here, your ticker symbol. Right next to it is going to be all your different time frames that you can look at. So like this is going to be the 4-hour chart. It really depends. So if I'm looking more macro, if I want to see the big picture, then I'm going to use daily. I'll look at weekly, but you don't take trades off of weekly charts, okay? But I will look at daily. I will look at 4-hour and I look at 1 hour. Those are going to be the 3 most common time frames I'm looking at when I'm looking at macro. And then when I'm looking at micro, I look at 5-minute, I look at 15-minute, and I look at 30-minute. Please, for the love of God, stay off of 1-minute candles. You will drive yourself crazy and you will blow up your portfolio looking at 1-minute candles all the time. All right? Learn how to take trades. It's just, I'm not going to go into it in too much detail, but it's not giving you enough information. You're going to get a lot of fake outs. You're going to get a lot of frustration with all the fake outs that you're going to get. The more macro your candle is, you can really get a good idea of what is going on in the market. Even with my intraday trades, I'm always looking at like 5 to 15-minute candles and usually 30-minute candles to feel like that my trend is still heading in the right direction. All right, let's look at, also too, right next to the time frame is going to be all the different candles if you ever want to. So like line just turns your chart into a line. Never really ever look at that. I highly recommend trading off of your basic candles because all your different candle formations, whether they're evening stars, shooting stars, hammer candles, inverted hander candles, bearish haramis, bullish engulfing, bearish engulfing, all that kind of stuff is read through these standard candles. So I highly recommend learning how to read the candles. So I highly recommend just trading off of the regular candles. As far as indicators go, I'll kind of just run through all of these real quick. Here's going to be the ones that I have pinned. First off, you've got all of your simple moving averages, your 20, your 50, your 100, and your 200. Pretty much the 50 and the 200 are going to be the ones that I pay attention to the most. 200 by far and away is going to be the most important one to pay attention to when it comes to simple moving averages or EMAs, exponential moving averages. So the 200 day, so on your chart, there's a little tab right up here and it says show indicator legend, and that's a little drop down that'll show you everything that you've got going on. So if you ever want to remove anything, boom, you just click the X and it'll be removed. I also just will put the 200 simple moving average up. That's another indicator that you can use. I guess let me just clear all these out. We'll just go one at a time. All right. Obviously, you've got volume. You always want volume up on your charts whenever you're actively trading. And essentially, volume is just the effort versus the result. So on big volume days, you want to see big volume candles. On big red days, you want to see big red candles or black candles in this case. Anytime you got big moves, you always want to just make sure that the volume is supporting the move, whatever you are looking at, whether you want to be bullish or whether you want to be bearish. The volume is going to be what tells you. So I've got it cleared out right now, but normally I've always got volume pulled up on my chart, and then of course the volume will change with the different candles. So like right now, this is like 5 minute. And you can see what's going on. So like this massive sell-off that you got, the volume was constantly increasing. So this is basically telling you like this move is valid. People are getting out of the market at this point in time. Right here, all these push-ups right here, the price action is really weak. The volume is really weak. Tells you that move is not near as valid. All right. Like I said, it'll change on whatever time frame you are looking at. Okay. I'm going to skip over the 200 EMA filtered parabolic SAR. I just did a big voice chat with Bronx, so it's in a whole another video, way in depth. It's still relatively new to me. I'm still playing with it to decide how much I like it. Bronx in the Discord absolutely loves it, and he trades like a crazy animal off of it. He does a great job with it, so I'm not going to go over it because I'm still working on that. The average true range, this is one of my kind of new favorite ones. Essentially what it does is it kind of gives you an idea of how much the candles move in a particular day. Okay, so for instance, right now on SPY, the average true range, and on the inputs of it, make sure on the length you've got it over the previous 20 days. So there's 20 days typically in most trading months. So that's why I always have it set. I don't remember what the default is, but I always have it set on 20. So that way it's basically over the last month, how volatile have things been. So right now on SPY, the average move during the day is going to be about 6 points. So if I'm looking at needing to set my stop loss or anything like that, and I go, okay, here's where I would normally set my stop loss, but then I'm going to give myself a grace of another 6 points, if you will. Then that's what the average true range is. So that way you don't get faked out as much. And that average true range will change on the time frame. So if I'm making a smaller, more intraday trade, like 0.63. So right now on the 5 minute candles, the average move over the past month is going to be about 0.63 over 5 minute candles. So like I said, it's a great little tool. I'm actually probably going to do its own little video over it. So, but that is the average true range. Let's go to Bollinger Bands now. So this is one that basically I'll check. So essentially, what you've got here on the Bollinger Bands is you've got the 20-day moving average, and you've got two standard deviations from that. And the whole goal of Bollinger Bands is essentially that they're going to encompass, I believe it's like 90% of all the activity. And if you zoom out, you can see that that's exactly what happens. Anytime you have the Bollinger Bands tightening, then that's going to be a low volume period, and a low volume tightening Bollinger Bands usually leads to a lot of volatility afterwards. Anytime it starts getting really overextended on Bollinger Bands, then you're going to have some consolidation and even some pullback. So you can see right here, most recently on SPY, I mean, once it really gapped up and got outside the Bollinger Bands, now we've got accumulation going on, and above the midline in the Bollinger Bands is typically bullish momentum. Below is going to be bearish momentum. You can see right here on SPY that it's essentially becoming tighter and tighter. So the tighter and tighter it gets, then John Bollinger, his view of it was periods of low market volatility lead to periods of high market volatility. And you can see we are been range bound in SPY since essentially February 2nd, and it's the 17th, so almost 2 weeks of range bound. You can see what happened last time. There was a lot of range bound, then boom, you got the big move after that. So Bollinger Band is not something I have up all the time. It's just kind of one of those when I'm looking for trades, or whether I think a move is, is a stock getting drastically oversold or is a stock getting drastically overbought. It's just another layer or level of confluence, if you will, to back up hey, this means we're probably going to be getting some pullback, at that point in time. And I'm going through all these relatively quickly. Of course, if you ever have questions over any of these, please don't hesitate to reach out. Your EMAs, these are going to be your exponential moving averages. Same thing. You got the 20, you got the 50, you got the 100, you got the 200. 200 EMA being crucial. Pretty much when you're on the top side of the 200 EMA, then overall you're a little bit more bullish. When you're on the downside of the 200 EMA, then you're in bearish territory at that point in time. But they are very important. You'll see a lot of action around the 200 EMA. Now on, why is that? Just make these. Now the ones that I use all the time are going to be the 921 EMA. These are basically going to be anytime you got the 9 crossing above the 21 EMA, that is considered very bullish. Anytime you got the 9 crossing below the 21 EMA, that is considered bearish. From an indicator standpoint, it's the 921 cross on TradingView by Sunny Pawar. I don't know if that's correct, but I like this one because it actually gives you the little crosses when they are actually officially crossing. Now, all EMAs are lagging indicators, so you don't trade exclusively off of those, but when you hear me talking about like riding the 9, those are going to be the days that you have where it's just every time. Here's a perfect example back over in here, which would be Friday, where it's just when you're in super bullish territory from an intraday standpoint, you can just see that every time SPY comes down here and tests that 9 EMA, it's essentially getting a big push up. So, like I said, very bullish when you're on top of it and you're just cruising right along with it. And then, like I said, anytime you get the cross down, it's going to be bearish. Now, you can see here, when you're range bound, I mean, just look how many crosses you're going to get. So you don't just go, oh, the 9, cross below the 21. I'm buying a ton of puts at this point in time. You got to wait and see, what is my overall picture telling me. So that's why I do like to use these more on the more macro time frame. Like I said, I will definitely use them on the micro, but anytime you get like those daily cross ups, you can see, so right here you get a daily cross down, you get a massive push down. You get a daily cross up, you've gotten a massive push up. Right here, once again, if you did enter right here when you got the daily cross up, when SPY was 373 overall, you would have been very happy. Just like if back here, when you got the daily cross down and SPY was at 410, you could have ridden it all the way down to 350 if you were shorting the market. So it's definitely a great, level of confluence, but you still can get faked out here. Like right here, you got a cross up and then immediately went to a cross down. But you can see here, this cross up, you were not getting solid push up afterwards. You were getting consolidation, and then you got the dump at that point in time. So once again, it's the EMAs that I will use all the time, and because they're much lower, the 9 and the 21 versus like 20s and 50s and 100s and 200s, they're a little bit more reliable as far as some price action. So once again, right here on the 5-minute, if you played this cross down, that would have been from 412 all the way down to 408. Excuse me, if you played this cross up right here, that would have taken you from 411 all the way to its peak at 412. Almost 413, so basically a 2-point move. Like I said, don't trade exclusively off of it. It's just another level of confluence that I always want to have on my chart. The MACD is basically a momentum indicator. Is the stock, does it have bullish or does it have bearish momentum going on in it? I typically like these on a more macro time frame, so kind of the daily. You can see that whenever you cross the signal line, so whenever I'm just going to make it a lot bigger. So if you ever want to in TradingView, you can just grab right at the top line. So anytime you have the EMA crossing that signal line, then that typically leads to bullish momentum. On your MACD bars, the darker green the bars are, the stronger the momentum is. Once that starts getting a lot lighter, then the weaker it's going to be. But really what you want to see is you want to see crosses. Once the crosses happen, and I'm going to make this smaller again so you can kind of see what happens on the chart. So right here, this is where a cross happened, and then you got a nice push up. So that would have been, from 380 all the way up to 432. When the cross down happened, then that would have been from 416 all the way back down till you played the cross. If you stopped out once it crossed up, would have taken you down to 356. So once again, a little bit of a lagging indicator. Here we are on SPY right now. So we just got a daily cross down on the MACD. Like I said, it's not the only thing that you trade off of, but typically when crosses happen, so right here you can see you got a cross up, and then it came back down, then you got a cross down. So it was all kinds of faking out going on back in here. So the more sideways accumulation style trading you're doing, so the MACD to me is more reliable once there's clear direction going on. The more you're in accumulation, the less reliable it is going to be. Okay, but it's another one of those that I'll just, okay, here's what I'm thinking on my trade. I think everything is looking bullish. What's the MACD telling me? Oh, the MACD is telling me that we just got a MACD cross up and bullish momentum is coming into the stock. Then great. That's, like I said, it's just another level of confluence for your trade. On balance volume, definitely not something you trade off of, but it essentially is showing you. It is what would your chart look like if it was purely based off of volume. So every time there is a green bar of volume, then the OBV would go up. Anytime there is red volume, then the OBV would go down. So, and like right now on SPY, you can see that there's a divergence. So as SPY's price has been going up, the volume is actually still trending down. So that's going to be a bearish divergence, which would basically tell you like there's not as many buyers stepping in here as what the chart would look like. Once again, it's something to pay attention to, but that's something to pay attention to like at off hours. Like I don't ever have OBV going on at the bottom of my screen when like during the trading hours. The RSI is a great tool. Like I said, kind of like MACD, another level of confluence, but this one is one that I will pay attention to a lot more, especially on the shorter time frames. When holy cow, SPY finished the day at 15 on the 5-minute RSI. That's wild. But that goes to show you right there that like it can still keep going down. So when RSI is in neutral territory, it's between 30 to 70. 30 is obviously towards the low end of the spectrum, and that anything below 30 is considered that the stock is oversold. Now, obviously, it can still keep going down. Let's see here. What was SPY at when it first entered oversold? So SPY today was at 410 when it first entered the oversold territory and still went on down to basically 408 before it bottomed out. So, but typically, you're going to be able to look at this historically. Typically, you don't get to, any more oversold than about 19. There's about 16 right there. So, I mean, this is insanely oversold when it comes to SPY. Just like you're going to only have so many overbought territories. When you have it crossing back up into 30, so as you get, this kind of start curling up and you cross into 30, that is considered bullish. When you're up here in the overbought territory and you cross back down into 70, that is considered usually bearish momentum. But especially, I always look at this from a daily standpoint. Where do I think I potentially could really start catching some pullbacks. So, SPY hit 73 right here, and that was the end of the road. So once it gets into way overbought or way oversold territory, that's when you want to look at, if you're long on a stock and it's way hot, then you want to look at getting out. Unless it's just something you're just, buying and holding and not paying attention to. But that is going to be, like I said, I use RSI more for kind of some entries and some exits more than anything. And then, of course, volume is up there. The VWAP, volume weighted average price, is going to be, I use this for intraday trades. And the easiest dummy way to explain it is above VWAP is bullish, below VWAP is bearish. So it's kind of taking your average price, volume weighted average price, by volume, and you'll see a lot of times throughout the days you'll get a VWAP test, and if overall things are still bullish, then you get bounces, okay? If you come up here and you cross through, you can see the strong momentum candle, then you came back and retested, then you continued to push back up higher. So that's the way that I like to use VWAP. Another way I like to use it in day trades is with the confluence of the 921. So like right here, I always love shorting when the 9 is pushing the price action down. When that 9 pushes through the VWAP, you usually get some big nasty sell-off candles, especially if the move is going to be valid. So let's again, this is a quick, day trade scalp. If you entered puts right as the 9 was about to push through the VWAP, you would have gotten a 406 all the way down to a 405. What would it have been at the top? 406. So you got a full point move. So if you'd have entered puts right here, then you would have gotten, multiple points all the way down to 406. So almost a 2-point move in about a 20-minute period. If you were pretty close to expiration on options, that would have been a real nice trade. And the reverse is true. If you're right here, as you look like you're about to get a cross up going through VWAP, if let's say you would have entered right here, once you actually broke VWAP, that would have been right around 406.70 all the way up to its peak, right around 408, so little over a point and a half move right here. If you were in some calls, that would have been a great trade right there. And then you can always come down here and, like I said, you got to see your let me put it this way. You got to wait for the right moment. So if you were like, oh, okay, it looks like it might curl down, it might push down, then you want to basically have a stop that's just basically right above VWAP. So that way, if you do get faked out here, so you did get a breakdown, but then pretty much the stock, like I said, SPY would have pretty much recovered right afterwards. So like I said, anytime I'm playing this type of trade, then this would have been you'd have taken profits pretty quickly here because you'd have gotten a nice IV ramp. But as it's starting to come back through VWAP, then that is going to be where you would stop out, like on runners or anything along those lines. Okay. Like I said, I'm going through all this relatively quickly. If you ever have questions, please reach out to me. And I think that was pretty much it. That's pretty much it. So at the end of the day, when I'm looking more intraday, pretty much the 921 EMA crosses and VWAP is going to be the only things really on my chart for the most part. Highly recommend you get really good at reading volume and candlestick, your price action, and read volume price analysis by Ann Cooling for sure. This video has probably gone a lot longer, and I probably got way more complicated than what I intended for it to be. But that's essentially kind of how I'm looking at TradingView anytime I'm charting. Like I said, please reach out with any questions, comments, or concerns. Much love. I will see you guys in the next video. Have a good one.